Welcome back. Hope you're having a good morning. Well, we've listed out all the stocks that we're looking at, and let's get some analysis going. Dharmesh Kant, Head of Research at Chola Securities, joins us on the show. Hi, Dharmesh. Fag end of earnings. Looks like you've had a good, relaxed weekend. But let's focus on a couple of numbers. Tata Motors, the PV business, came out with its set of numbers, looked weak. They have challenges for Q3 as well, particularly in JLR. What's the view on this one?
Yeah, good morning, Nigel. Thanks for having me for the show. The numbers were pretty weak and the guidance was equally weaker with, 2.5 billion pounds of cash outflow going forward doesn't augur well for at least for next 3-4 quarters. And if you look at the JLR numbers, it has come down from a run rate of 1 lakh plus to 66,000 and going forward it's likely to squeeze further. So all sets of worries are, plaguing the company. Earlier it was tariffs and then the cyber attack, and now the phase out of Jaguar also will have its, cost playing out into the P&L. So I think it's better give a skip unless you are a buyer for 2-3 years and then hoping that in 1 year time frame the dynamics stays with JLR business and it continues to pull it through. Otherwise, I think passenger vehicle business should be given a skip. However, if somebody wants to take a chance, maybe CV still gives you a better opportunity compared to PV business.
Okay, all right. Dharmesh, I wanted your view on Glenmark. And the con call is currently on, and those flashes are running on the screen. And they'll have to come out with a very, very good clarification for the last quarter's numbers because they look absolutely very, very weak. And the bigger problem is positioning was heavy as well. What's your view on Glenmark as a stock? When they did that licensing deal, I recall the stock had gone to 2,200 rupees. It's at around 1,900 rupees. But if the clarification is not very good, the stock could be under pressure. Your view on the name?
No, definitely, yes, Nigel. That day itself, the stock rallied around 20% kind of a circuit it was when the announcement came through, and most of the revenue booking has already been done through the licensing deal. So almost $560 million of revenue has been booked. Going forward, the run rate will come down to $35 million for this year, balance of the year, and next 2 years it would be around in rupee terms around $70 million, so $60 million, 300 odd crores. So the timelines by which the drug would be rolled out, the development phase and the commercial, distribution phase, that is very critical. And the size of the market which the company is being for the American pie of the business, along with Europe, China, and later Japan, along and the India side of the business. So that will, be very critical for the price to sustain from here. Having said that, I don't think there would be a huge correction in the price, even if the clarity is not given this quarter. If the value wants to take a couple of quarters before committing on the timelines, the stock will, chug around. I don't see either ways big movement happening into the stock. India business was definitely weak. So let's see what they have to give a clarification on that.
Dharmesh, just a few, and Glenmark the call is on, as we've been saying, and we're putting out some lines from there. Just a couple of names, Dharmesh. If you want, Grow was, it's $150 now, right? If you have a comment there. Muthoot Finance was up 10%, so that was a big mover from Friday. And of course, all these defense stocks have started to make a comeback once again. There was specific news flow for BDL, but results basically. But defense index ended about 1% higher. So if you have any thoughts, Grow, Muthoot, and defense.
Yeah, good morning, Prashant. As far as Grow is concerned, I will give it a skip being a competitor, but yeah, they are the number one players and they are commanding a huge premium out there compared to the others in the basket. But we are not very, bullish on the intermediaries or the brokers per se, but we are bullish on the other capital marketplace, which includes infra and AMC. So that's the reason why we have given it a skip. It's getting a retail traction, which is likely to continue here. Muthoot Finance is in a sweet spot. The management, the kind of guidance upgrade they have given, I haven't heard that kind of a guidance upgrade from the management in the last 5-6 years. So it's a very bold step by them, and they are conservative management. So I think they are likely to deliver on that. Gold Finance per se has been doing particularly well for all the NBFC. So that is likely to be there. Defense, Prashant, we have always been a buyer in any declines, and I think a structural growth story in the making. And the type of order books is getting swelling. BDL, you took the name. Look at the type of order book. They are sitting on 23,000 odd crores, so almost 5-6 times the revenue visibility. Same is the case with HAN and BEL. So these companies one should be, buying on declines, and it should be a portfolio buy for at least 4 or 5 years. because as time progresses, your 64% kind of a value addition will happen in India, and that will take care of the margins on the higher trajectory side. So the topics out there remains HAL, BAL. These are the two counters we are sticking our neck to.
Well, Dharmesh, coming back across to you, a couple of other big movers that we have seen in the last few trading sessions. One is Amber. They've gone ahead and they've strengthened their presence in the PCB segment. They've done some inorganic growth via one of their subsidiaries. The acquisition revenue is just 390 crores or thereabouts. But, it could be strategically important. Any view on Amber Enterprises?
Yeah, Nigel, I think, this is a small acquisition, and the last quarter numbers were, very dismal set of numbers. And so was the case with all of the REC players in the segment. So I think as the season unfolds for second half, this is not a good season for companies like Amber. But the other part of the business, PCB, we have to see how it pans out. So the valuation wise also it's expensive. It's not very cheap, so that you can jump and buy it. The advice would be to wait for one more quarter. Let's see how Q3 pans out, number pans out, and then if the traction is picking up, one can go and buy it. Just because the versions are pretty expensive, we are giving it a avoid as of now.
Yeah, no, absolutely. And I think it's a fair point that you make, Dharmesh. Just maybe a quick look at some other names. By the way, broader markets were under a fair bit of focus as well. Although, actually, market breadth was a little negative on Friday. Volumes completely with of course what was up and about. There's this company which listed recently, ignored after listing immediately. It's not very. I think about 30 days old in listed space. Rubicon Research. Did you have coverage on this one, Dharmesh?
No, sorry, Prashant, we did not cover it. Yeah.
I see. I got that. Jubilant Food, Dharmesh, any thoughts? Saw that big move on Friday?
Yeah, definitely. In the QSR space, this was an outlier when they reported the numbers, and a good traction was found there, both in the same store sales growth as well as the new stores that they have been, making more inroads into the country. Valuations are, higher, but that has been the case historically. But if somebody wants to be into the QSR space, I think this is the only counter where the economies of scale and unit economics is working very, fine with them, because they are not asset heavy or the restaurant heavy kind of a business. Others who have tried to do that, the cash burn has been far higher, or the capital deployment has been far higher than the revenue being generated. So for QSR players, if you want to be in the space, I think Jubilant Foodworks is the top pick out there.
Jubilant Food is the top pick out there in the QSR space.
Yes.